everyone, welcome back to another episode of Finance on Your Terms with Mike and Danny. We're going to continue our series this week on diving into your financial playbook. Football season, it's running course right now. Hopefully your team's doing well, and we want to continue going down that path, giving you some plays, giving you some offense to really take advantage of your financial playbook. We've talked about diversification. We've talked about dollar cost averaging. This week we're going to jump into rebalancing. I'm going to do a quick definition. Mike's going to give you some examples, and hopefully by the end of this video, if you have never heard the term rebalance, you'll have a little bit better idea of what it is. So what is rebalancing? Simply put, when you work with an advisor or when you look at your investments first time, the very first time you're looking at your portfolio, we're going to put together this model portfolio based on age, based on risk tolerance, based on your goals, based on what you want to do for your future. Could be 80% bonds, 20% stocks, any combination of those types of things, combinations of the various sectors. And we're going to start by saying, okay, your funds are going to go in this model portfolio. So as time goes by, 6 months, a year goes by or so, well, if the stock market had a run like 2017, all of a sudden maybe your stocks are all way up. So now you're 90% in stocks and only 10% in bonds. Simple rebalance of that portfolio would sell off some of these stocks while they're at a high, put it down into those bonds so we get it back to that 80% or 80-20 allocation that we agreed upon when we first met with you. Very, very simple definition of rebalancing.
Yeah, just bringing your investments back to that original allocation. Well, why is that important? Well, it's important because we as humans tend to react emotionally a lot versus logically. The perfect example is if we go back to like 99, 2000, there was something called the tech bubble. And maybe some of you out there that are listening were maybe too young to remember this, but a lot of us weren't. And what happened was there was a lot of stocks. You know, the internet was kind of still fresh and young. There was a lot of these .com stocks, all these internet companies that were coming about. And they were very exciting. Because it was doing this e-commerce thing that not a lot of companies had done before, and a lot of people saw potential in them. And so these companies exploded. I mean, they were up hundreds or thousands of percent almost overnight is what it felt like. Well, so we as humans, what emotion tells you is that if we've got this two investments, so let's say tech and non-tech. Well, if our tech investment is up here and our non-tech investment up here, emotion tells us, well, damn, this investment's gone up. Well, you got to put all of our money into this investment and shove all of it in there and forget about this one over here. Logic and rational investing tells us the opposite. If our tech stock is up here, we need to lock in those gains, sell, and rebalance by putting more money into this other stock if we were kind of a 50-50 portfolio to start out with. That's the idea of rebalancing, and what it does is it takes emotions out of the equation and reverts us to that original allocation that was meant for you and for your goals. And long term, that has proven to be a huge success factor in your financial future. So how often should you do this? Well, honestly, you can do it as often as you want. For our clients, we do it on a monthly basis, but even if you're doing it once or twice a year, and a lot of 401ks will let you set it up to where it's automatic. So look into that and see, as long as you're doing it once every 6 months, once every year, so things don't get completely wonky in your portfolio, that's going to help you stick with the plan, stick with the goals. That combined with the dollar cost averaging and that original diversification are going to be probably the biggest play.
Biggest play, yeah. That's your Hail Mary.
I don't even know. I was trying to go back to the football thing, but you guys know what I'm talking about. So.
Well, and the super important part that I think you've heard multiple times through these videos that we have to hit on one more time as a sidebar is we're looking to take the emotion out of it. Yep. We're in an incredibly volatile time right now. If you're looking at your statements on a weekly, daily basis, you know exactly what I'm talking about. All we're doing is trying to put as much logic and rational thinking into that market so that at the end of your goals, your retirement, you have what you originally signed up for.
Simple steps that you can take. Join us again next week. We're going to be, I think, wrapping up our financial playbook series. Let us know if there's anything else that you want to hear. Continue to share these videos, and we will see you all very soon. Thanks again.
Thanks, everyone.